Hello. Let's take a look at what we have this week for our information. I'm out of the market on the sidelines in cash. Everything is not awesome right now. The VIX has started to creep up, and we don't have much farther to go. Right around 20, that guy's going to start making money, and he gets unbelievably rich if it really gets up real high. Okay, even our hedged portfolio number 2, with all this hedging, has just had a steady slide down to where right now we're only just barely above where we were. In the meantime, the QQQ has dropped 5.5% from here, probably over 6% from that peak, and SPY is down 3%. So a 6% drop on the QQQ is enough to say, let's study what we might want to do right now. Now, the timer from 2006 is still a buy, but I smell trouble now, and we'll talk about that. Looking at our 401k plans, COMEX, which is a commodity fund, is the only one that's actually looking okay. It has started back up. It's not making much money, but it is making a little money. Everything else is losing money. And it's time to go cash. Sell your PGOEX, sell your VIGAX, sell your OIEJX. Find the thing that's closest to cash or short-term bonds in your accounts now. If you have trouble finding what you need, send me an email with what your choices are, and we'll try to figure out what's the best for you during this period of time if you don't have a way to just simply put it in cash. As we said, I'll just show the human interest 401ks. You're 100% cash. You can put it in shy. 0 in stocks, 0 in bonds, 0 in income funds. All the guys out at Merlin, you can sell that stock fund and buy an income fund. Keep the commodities for a while. So as soon as you can, and I know if you moved on this last week, you're stuck with what you have. But when you can, go to 50/50 COMEX and PRRIX. However, once you get around to it, check in case the mix has changed by the time you can actually jump into them, make a change in your accounts. All our other portfolios 1, 2, and 3, everybody's going 100% cash. Okay? That's an easy one to follow. Nothing new, nothing new. Timing signals still say buy. Volatility on the ATR percent's a buy. 200-day moving average for the NASDAQ is a buy. But the momentum is serious down, so we go cash 100%. Here's what I mean. The Russell 1000, it triggered a sell back here, and we've had just a straight drop ever since. Right now, we're sitting at 50%. 50% of the stocks in the Russell 1000 are below their 200-day moving average. That is a strong sell signal. Our S&P, from its peak, it's actually triggered a sell now. So we've got both of them triggering sell. And it's basically 50% have dropped below the 200-day moving average. That's a strong sell. Our QQQ, it's only down 66. So as normal, it is holding up better than the other two. as I look at these other 2, if I saw any bluebirds, if I saw that they were starting to level out or look like they were going to, come on back up, I would say that we can just ride this out. But I don't see that happening. Well, right now, these are all headed down and there's nothing that's jiggling around showing that they might turn around. So it doesn't cost anything. Go cash. If next week they all turn around, wonderful, but probably they won't. And on the next one, I'll show you why I want to move now. When we look at the 2 signals together on the QQQ, if we wait for this to trigger, it has to come down a couple more weeks before it's low enough to trigger on its own. Our volatility has started to pick up, but it has a long ways to go before it triggers. So we're in one of those strange market situations where we were in such good shape. We're a long ways away from the sell triggers on both of our indicators. But because our other studies of the Russell 1000 and the S&P 500 are strongly down, I think the prudent thing to do is to go cash now and sit on the sidelines. We'll take up next week and see what's going on. Thank you very much.